Heading to the closing bell with the top down and the wind in our hair, we've got Kristina Hooper, Invesco Chief Global Market Strategist, along with Stephen Dover, Head of Equities at Franklin Templeton. But first up, Jared Blickery watching the markets.
Yeah, a little bit breezy here with the top down. Let's take a look at the close, about to close for the quarter. Oh, how about this? Dow is now in the red, but for the quarter, year to date, same thing, up 8%. Also taking a look at the S&P 500, that's up 6%. And guess what? The NASDAQ kind of trading sideways a lot of this year, but still up 3%. And then also the Russell 2000, that is a big outperformer. That is holding on to gains of about 13%. Well, I want to also take a look at the VIX because as speculated 1 hour ago, about to close below 20. And this would be significant, especially considering where we were just 1 year ago. We got to take a look at some of our stocks. And in the NASDAQ 100, we have Apple up 2%, Facebook up 2% as well. Microsoft, Amazon, and Alphabet each up over 1%. Tesla notably up over 5%, working off some of those losses that we had a couple weeks ago. And also checking out the sector action for today, we see tech in the forefront along with discretionary. Here's a closing bell for the first quarter.
We have the S&P hitting an intraday record today, closing in the green. It looks like, taking a look at where everything is closing up. Dow up just around 82 points, NASDAQ up just around 1.5%. Jared mentioned that it's also the end of the first quarter. We have the Dow and the S&P in the green. Dow up just around 8% for the quarter, S&P up around 6%, NASDAQ up about 3%. The real outperformer, the Russell 2000, with gains of just around 13%. Let's bring back in our panel. We have Kristina Hooper. We're also joined by Stephen Dover. Kristina, let me go to you first. Just this rotation that we've seen during the first quarter, we can see that in the relative underperformance. I say relative because the NASDAQ still closing the quarter up just around 3%. But as we look ahead to the second quarter, what's going to lead the way?
I think we're going to see more of the same in terms of market leadership. This is an environment in which the economy is likely to accelerate. We're going to likely get improving economic data. And I think that means that we'll see continued outperformance of areas like energy, like financials, like consumer discretionary, materials, industrials, those areas of the stock market that are most sensitive to the economy.
Stephen, I'm curious, anybody who ran track in high school or swam in high school knows if you jump the gun, you got to start over. What are the risks? I mean, are investors a little bit early to what? We don't even have the earnings reports yet for the first quarter.
Well, I don't think investors are early. We're very pro-risk in that we're positive on the equity markets. I think the really big news is that we're at a very big tipping point right now. We're out of the pandemic or getting out of the pandemic. There's a gargantuan change in how our economy is going to be run with the stimulus plan as well as the Build Back Better plan. So I think investors are going to have to look very differently looking forward than they have looked in the past.
Kristina, we're expected to get comments from President Biden here later on this hour. He'll be laying out his infrastructure plan. Is expected to be right around $2 trillion. How is the market looking at this and just in terms of its potential impact going forward?
Well, it's definitely a double-edged sword for corporate America. There's some salivation that's being created because that's a lot of spending that could benefit companies. But on the other hand, the Biden administration is laying out a plan to pay for that. And that, of course, involves a hike in corporate taxes, which is not being well received. So I think what we're likely to see, hopefully, is a spending plan that has a lower tax rate attached to it in terms of a tax hike. So corporate America, I think, will probably jockey for about a 25% corporate tax rate, although what's being proposed now by the Biden administration is 28%. So meeting somewhere in the middle between where we are currently and where the administration wants to take us. I think ultimately that will be received positively by the stock market after we see some digestion.
Stephen, when we talk about, paying for this with a tax hike, the original tax cut was supposed to go to 28%. They went to 21% for the corporate tax. We've had Gary Cohn on this platform repeatedly saying, yeah, go to 28%. He was the architect of it. So why wouldn't it be well received, do you think?
Well, I think any tax increases is not going to be well received by business, but let's look at these tax increases on a much broader scale. It's more than just the top case. It's a minimum tax. It's a global tax to try to arrange things across all corporations across the world. So there'll be big agreements with other countries. So a lot of corporations that have paid lower taxes will pay larger taxes in the future. I think this is a real tilting point. 40 years ago, Ronald Reagan famously said, the government's the problem. And now we're coming back to the government as the solution. So I think for companies and investors, there will be much more focus on what's the government's doing and what is the tax policy than we've probably seen in most of the last 40 years.
We have some breaking news out. We need to get to Jared Blickery. Micron releasing its earnings. Jared, what do you have?
That's right. Stock's up about 3 to 4% in after-hours trading. Nice beats on both the top and bottom line. Second quarter adjusted EPS coming in at 98 cents. I don't know if this is an accurate estimate comparison, but it looks like the street had the estimate lowered at about 94 cents. Adjusted revenue for the second quarter coming in at $6.24 billion. That's just slightly higher than the estimate of $6.21 billion. Second quarter adjusted gross margin, 32.9%, beating the estimate of 32.4% by about 50 basis points. And some guidance, some positive guidance that they're raising, seeing third quarter revenue 6.9 to 7.3 billion. That is above the street's median estimate of 6.85 billion. Also seeing third quarter adjusted EPS $1.55 to $1.69. Estimate was for much lower, $1.34. And got a quote from the CEO, Sanjay Mehrotra. Micron's strong fiscal second quarter performance reflects rapidly improving market conditions and continued solid execution. Our technology leadership in both DRAM and NAND spaces places Micron in an excellent position to capitalize on the secular demand driven by AI and 5G. So again, stock up about 3% after hours trading. And we are looking at some nice beats on both the top and bottom lines, guys.
All right, thanks so much, Jared. Certainly a name to keep in mind as we turn our focus to tomorrow's opening bell. But Kristina, bringing it back to today, a big headline that we got out on the COVID front was France shutting down here for 4 weeks in an effort to try to get COVID under control. I know you're closely paying attention to COVID-19 infections over in Europe. How big of a risk do you see this being to the market in the short term?
Well, certainly it is a cautionary tale of what could happen in the United States. But it doesn't appear that we are on that course right now. So I don't think it's going to have a very significant impact on the U.S. stock market as of now. Of course, if the numbers change, if we start seeing a significant increase in COVID-19 infections, we've seen a small increase over the last week, but if we see a significant increase, if we move in the direction or get closer to where Europe is, then that's going to be problematic. But I think we're quite far away from that now. And in fact, what we're seeing from Israel is very, very positive, and I think creates a lot of optimism in the U.S. just because we've done a very good job with vaccinations. Israel is the gold standard, and we're seeing how they're benefiting now in terms of their economy and pretty low infection rate. So that could be our future as opposed to Europe.
Stephen, you actually see opportunity in Europe despite what's happening with their inability to clamp down on the pandemic.
Yeah, we see opportunity, some opportunity in Europe as well as in Asia. One of the big changes that's going to happen in Europe is a very large green energy initiative that will really restructure Europe's economy. And if we look at, again, the proposal today with Biden, and if we look at what China's doing in terms of its infrastructure plan, there's sort of a whole global plan to rebuild the economy, and Europe will benefit from that as well.
And sticking with overseas, Stephen, I know you're also finding some opportunity in emerging markets. When you're identifying those specific investments, what are you looking for?
We're looking for economies that either have their own growth or are going to leverage the United States growth. If we look at the growth in market capitalization over the last few years, the United States has vastly outperformed other countries in general, and we don't think that can happen forever. So we think that there's opportunities overseas, sort of a rebalancing, not unlike what we've seen this year between growth and value. And one of the places we see those opportunities are in Japan, but we also see that in emerging markets that are going to do well off of the growth of the United States economy.
Sorry about that. I was trying to keep the siren from interfering. Kristina, you've pointed out that Fed speak related sell-offs can be opportunities as well for those who might want to look, at acquiring, whether it be fixed income or equities. When do you think we might get another Fed speak sell-off?
Oh, there's a lot of Fed speak going on. So there are so many different opportunities. And it's not just specifically Fed speak. On days when we typically see the 10-year yield go up, those are days when we often see technology negatively impacted, the tech sector. So I think there are a lot of opportunities that will present themselves in coming months. And for those with a long time horizon, they could be very opportune.
All right, both of you, we appreciate your insight. Kristina Hooper is Invesco Chief Global Market Strategist. Stephen Dover is the Head of Equities at Franklin Templeton. When we come back, we want to let you know that if I can scroll down fast enough,